So, what is going on in the real estate market? We've got houses that are sitting, prices that are dropping. Are true prices coming down? Are sales prices coming down? What exactly is going on in the market? Well, we're going to dive deep in that. This is going to be a two-part video series. My name is Sean Price. I am with eXp Realty, the Price and Price group here at eXp Realty. And stay tuned as we go through these next two videos. So the first thing that I want to talk about is the general pulse of the market and what's been happening over the last 7 to 14 days. We're going to dive into some graphs. We're going to get into some statistics here so that you can see very clearly what's been going on. But the general pulse of the market is that it feels like properties are sitting a little bit longer than they had been, 6 months ago. It feels like prices are seeming to calm down quite a bit. It feels like the market is slowing, which, as we will see, the market is in fact slowing. Or softening. I'm so sorry. Hold on 1 second. I just got an earbud warning. I want to go into detail with you about what's been going on in the market, not only in the last 14 days, but I also want to look at the market overall and see where it stands in the last this month. The month of August compared to the month of August a year ago, so we can kind of see what the tendency is towards the market. A lot of people right now are in a place where they're trying to time the market, and the real estate market is very, very difficult to time because there are so many factors that are involved. There's a saying out there that says the best time to buy real estate was 30 years ago, and the second best time is today. And I am a subscriber to that saying because the fact of the matter is you never know what it's going to do. There are strategies that you have to take into play when you're looking at what the market's currently doing. So you want to make offers appropriate to what is actually happening in the market. And if you're selling, you want to have expectations that actually match what the market's doing. But outside of that, trying to time the market, most of the time people end up missing it. For example, I've got a lot of buyers right now that are sitting on the sidelines expecting prices to come down. And the fact of the matter is, as we're going to see through the statistics, there's no evidence and no indication that prices will be coming down anytime soon. And while market activity is slowing quite a bit, the actual values themselves are still continuing to rise. They're not rising nearly as much as they were a year ago, but they are continuing to rise. So let's just dive into the numbers here and let's see what's going on, okay? So if you look at this graph here, just in case this is your first time watching our weekly market report, the orange line is our buyer activity, and you can see over the last 7 days, the buyer activity was down 28%. Now that's important, but if you see, so this was the last 7-day dip. If you look at the last 14 days, you can see there was, if you go back 21 days, you can see there was an increase during this week, and then there was a significant increase the week prior to now, and then we had a decrease of 28% over the last 7 days. Inventory, the blue line, is actually up 23%. Well, what's significant about that is if you go backwards, you can see that it was flat last week. And then the week before that, when school started, there was a significant decline in inventory. So what's important about this? You see this gap right here? Buyer activity, the numbers that we use when we're tracking buyer activity on our weekly market report, we're using leading indicators. We're not using closings because closings are historical. Typically, a closing will take anywhere from 30 to 60 days to actually happen. So we don't look at the actual settlements or the actual closings. We look at properties that have gone under contract or pending in the last 7 days because that's giving us the most recent history to determine buyer activity. So when we're looking at pendings or active under contracts, in order for those events to occur, there has to be inventory, because if there's not inventory, then there's no contracts to be had. So when we go back to the graph here, and you can see that we had a decrease in inventory here, a decrease in inventory here, and then it stayed low here. Well, buyer activity still continued to increase because it was eating up all of this excess inventory. But what happened is buyer activity hit a peak while inventory maintained its bottomed out state. And then when inventory finally did increase this last 7 days, the buyers didn't have anything to buy, so that's why buyer activity went down. So basically what happened is Buyer activity was increasing, inventory dropped, buyer activity continued to increase, inventory stayed flat. Now there's no more inventory for buyers to buy, so buyer activity dropped this past 7 days, but in this past 7 days, inventory clicked back up. So what that looks like is that, oh my God, inventory is going up and buyer activity is coming down. Well, the fact is the buyers didn't have anything to buy. So now that this inventory has gone up, I really expect next week that buyer activity will pick back up again because the buyers are out there. We're getting a lot of calls from buyers. The buyers are definitely out there. The buyers themselves, they do have an opportunity right now because there's not as much competition. There aren't as many properties that are getting multiple offers. But properties are still selling at 100% of their value. They're actually still appreciating, probably about 3 to 4% right now versus the 20% that we saw the previous year. But properties still are appreciating. So that's where my concern comes in for buyers that are kind of sitting on the sideline right now. We are 6 months into this interest rate hike. We are 2 months into this recession. We've been dealing with the war in Ukraine for as long as we have. So all of these economic factors that everybody's been kind of sitting around to see how that's going to affect the market, we're seeing that it is softening the market, but it's not bringing prices down. And what I mean by softening the market, if we go back to the graph, you can see that this is where the levels of activity were during the peak of all the chaos. And you can see that it's certainly at a lower number now. The number of transactions has certainly come down, but the pricing isn't coming down. The market is softening, but prices are not coming down. So it's just something that you really need to keep in mind if you are trying to time the market. If you sit and you wait another 6 months, those prices may continue to increase. So we're just going to see what happens with that, but that's, just keep this stuff in mind. Look at the numbers. Don't listen to the news. Remember, the news is out there to panic us, and the news is also giving nationwide numbers. The news isn't giving market-specific information. What's happening here, we are in a really unique market here that's completely different than what's going to happen in Idaho, for example. So really pay attention to your current market. That's why we do these market reports. That's why we try to do them weekly or at least every 2 weeks, so you have acute, up-to-date information on what's going on with the market. So if you go over to the strength of the seller's market versus buyer's market, you can see that we had a severe uptick into the seller's market 21 days ago. 14 days ago, it continued to increase. And then this last week, it dropped down because this gap here closed. So the numbers became more even. So we have more of a neutral market this week. Again, are we going to stay here? We'll have to see. We'll have to see what happens because now the inventory picked back up again a little bit. I expect these numbers to go up here. Okay, so that's what's been happening over the last 14 days of the market. If you have any questions about this market report, please feel free to reach out to me. I'm happy to do a one-on-one with you. On the second part of this video, I'm going to dive into the overall the month over month and what's been going on in the market over the longer term, not just in the last 7 to 14 days. Okay, again, if you have any questions, please feel free to reach out to me. If you're watching this on YouTube, please click the subscribe button. We want to get this market report out to as many people as possible so people can make educated decisions when they are making their real estate choices. So please help us get the message out to more and more people, and the more subscribers we have, the more likes we have, the better we're able to do that. Okay, I appreciate you. Let me know if you need anything, and we'll see you on the next video. Okay, so get ready for part 2 of our weekly market report / monthly market report. So if you didn't see part 1, which is where we went over the last 14 days of the market, I will have a link below, or you can reach out to me and I'm happy to send that to you. This video is going to look at the broader picture of the market overall, year over year, and so on, so you can get an idea of what is happening in the market, what potentially is going to happen. A lot of people are sitting back thinking there's a big crash coming, trying to time the market, trying to play the market. So we're going to present you with statistics. If you watch the news is not a statistical source, and you also have to look at the intention of where the news is coming from. Is somebody trying to sell you that the economy is doing great, then they're going to give you a spin on it. Is somebody trying to scare you and put you into fear and sell some kind of program, or is it just the general media which thrives on fear? then they're going to spin it to to make it seem like the sky is falling. The simple fact of the matter is the real estate market has slowed down. The real estate market has softened. In our market, this has occurred, but the real estate market is not crashing. Prices are not coming down. When you see these reports on the news, a lot of times they're talking about nationwide, and a lot of times they spin it in a way that makes you feel like, oh my God, the world is crashing. The fact of the matter is the real estate market is down. It's down 20% in some areas, but that's not prices, that's activity. And that's intentional. When they raise interest rates, the intention is to slow everything down, to let the economy kind of slow down so that the inflation can come down. So we are seeing that decrease in activity, but we're not seeing decreases in prices. And I'm going to get into all the numbers. But I want to really make a point here that it's important that you look at numbers and listen to numbers. That's what I love about real estate. Real estate is a logical transaction, so you can think about things strictly numerically, but you also have to understand what the numbers mean and how the numbers are derived. So as I'm going through this, I'm going to do my best to explain all the mechanics behind this and why these numbers are important and how these numbers may be skewed, okay, especially when we get to median house prices, okay? So I'll get into all that when we see it. All right, so first of all, let's go to the numbers and let's see what's going on with the market. And again, my purpose for telling you this, I'm not telling you the market's going to come up, the market's going to go down. I'm just telling you what we're seeing, and you can make the judgment for yourself. I do have an opinion. If you'd like my opinion, feel free to reach out to me. Also, keep in mind that these numbers that I'm pulling are from the multiple listing service here in Northern Virginia. These are very specific to our market. In fact, they're very specific to McLean, Vienna, and Great Falls. Those are the areas that I pulled numbers from. These numbers, I did do quick searches for Prince William County, all of Fairfax County, Loudoun County, and I found that the numbers were pretty similar to each other, and the ratios were very similar to each other. If there's an area you would like me to run these numbers for you, so you can have a better idea of your area specifically, please let me know. I'd be happy to do it. Okay, so let's get to the numbers. So, August 2022. Number of new listings, 358, compared to August of 2021, 443. Okay, so there's that decrease that we were talking about. There is a decrease in the market activity. The number of sales, same thing, August of 2022, 304, August of 2021, 431. Less houses to sell equals less sales that happen. Okay, there's less inventory, so there's less sales. Now, if the prices were going to start coming down, what we would see happen is we would see the number of new listings be significantly higher and the number of sales be lower. That means that properties would be sitting on the market longer, which meant that demand was not keeping up with supply, and that would force pressure. That would be a downward pressure on pricing. Okay, so keep that in mind because these ratios are very similar to each other year over year. Okay, so that's the market has definitely softened, is what we see here. But does that mean that prices are coming down, which is what everybody's waiting for? All right, days on the market. So what days on the market means is when a property goes on the market, how many days does it take for it to sell? Now, we all heard during the last year that properties were selling in 3 and 4 days, and yes, they were. That was very, very common. But keep in mind, this days on the market number takes into account the entire market. So we have a lot of new builds that are on the MLS before the multiple listing service. They go on the multiple listing service before they're even built. So they'll sit on there for 365 days before they'll sell, even though they weren't completed. So there are numbers in there that skew that everything is selling within the first weekend. They kind of skew that, so you get an average, okay? So that average is what we're looking at. So if you look at August of 2021, you'll see that the average days on the market was 36 days. If you look at August 2022, it's 28 days. Houses are actually selling quicker today than they were a year ago when we were in the heat of the chaos. They're selling quicker. In June, in fact, actually, let's go back to May, they were selling in 19 days versus in May of 2021, they were selling in 42 days. So the interest rate started going up in March, and you can see even in March, 57 days to 38 days, and it continued to drop down. And then it's just doing its normal slow increase. You can see down here that it did that last year. But the numbers are still lower than they were in 2021. So the houses are selling very, very quickly. It seems like they're sitting on the market longer. It seems like prices are coming down. I want to go into that for a second. So what's happening is when you had a house that would sell a year ago at 500,000, the next house would come on the market at 520,000. That house would get multiple offers and it would sell for, let's say, 540. Now these numbers are just, I'm making these up, but let's say 540. So now that's the new value of that house or similar houses. So the house that's similar to that now comes on the market at 560 and then they start climbing. So it was this stair stepping is what was happening. Well, as the market is shifting, two things are happening. Number one, sellers are now kind of wanting to try to take advantage of their capital. They feel like we've hit that peak of the market, so now they're trying to take advantage of the equity that they built up. So they are pricing their houses using that similar strategy. Well, buyers aren't buying that elevated price anymore; they're buying the market value. So sellers that are still putting their house on or property on the market at this value are having to lower their prices to get them closer to market value. The houses are still selling at or above market value, but they're not selling 20% above market value. So the homes that you see coming down are because they're overpriced, either because the seller had unrealistic expectations or the agent didn't know how to price the property appropriately. But if a property is priced appropriately for its condition, they are selling very, very quickly. Okay, it's not values that are coming down; it's sales prices that are coming down. All right, so that's days on market. We can see that that's actually lower. This is the significant one, months of inventory. So this is what we call the absorption rate. A neutral market is about 5 months of absorption rate or months of inventory. Anything above that is considered a buyer's market. Anything below that is considered a seller's market. You can see April through August of September of 2021, during the chaos of everything that we were seeing, we were at 3 months, and then we went up to 5, 4, 4, 3. During all the chaos before the interest rates went up, we were at 3 to 5 months of inventory. We're at 2 months the last 3 months. Demand is outweighing supply. We are not in a situation where there is too much supply. We are actually in the opposite situation still, okay? So now we get to median sales price. Now this number is going to seem different if you watched my report from last month, I realized when I ran the median sales price for August, it came back at $300,000. And I was like, there's no way that that's the median sales price for Great Falls, Vienna, and McLean. So I looked at what made up those statistics for Bright MLS, and it turns out they were including all the rentals. So the way a median sales price is calculated is if you have, let's say you have 15 properties that sold, the top 7 and the bottom 7, number 8 is the middle. That's the median price. So whatever that price point is, they're all ranked in order. Whatever the price point is at number 8, that's your median sales price. And they use this number because they want to not let the number be skewed by large or low sales. But what it does is it can give you an unrealistic number in a small sampling. Well, in this sampling, we have several hundred sales, so the median sales price is fairly good. But when I found out they were including the rentals, I had to pull those rentals out. And so that's why these numbers look higher than they may have looked on last month's report. But if you look at the median sales price, you can see we were at 1.025 in August of 2022. We were at 1.1, so it's $75,000 lower. But you can see that July was at 1.175 and July was at 1.075. So the number does vary. You can see that the numbers have been higher and now they're coming down just a little bit. So the median sales price is two things. I just explained what it means, but it also means that those are the properties that are selling. Okay, that doesn't mean that your value of your house is moving in the same direction as median sales price. Median sales price just tells us what the market is selling. So, buyers' desires may be coming down and they may be buying lower value properties at market value, but they're buying lower value properties because of the interest rates. So we'll see what happens with this median sales price. It's still sitting pretty strong, in my opinion. It doesn't seem to be coming down. In fact, if you look at it year over year, there's been just a general trend of going up versus here. Okay, you can see that trend is still an increasing trend. So this is what's been happening year over year. The market is still very, very strong. It is a lot less activity. That's why it seems like it's slower, but prices are not coming down yet. Are they going to? I don't know. But if I was a buyer, I would be very, very aware of what these numbers are doing and very aware of the risk of sitting back and waiting for the numbers to come up or come down while prices continue to escalate, because what's going to end up happening is you end up paying more in the future. So it depends on your strategy. If you want to talk specifically about strategy, let's get on the phone. Let's talk about it. Let's see what makes sense for you. If you're buying a house for a year or two, you're going to use a completely different strategy for that versus if you're buying a home that you plan on living in for 5 or more years. So let's talk. Let's go into this. Let's figure out the best options for you. If you have any questions, please let me know, and we'll see you on next month's report.